Okay, we're going to get into chapter 11, the college and university accounting, which one of the things you can do for any college or universities, you can go look at their financial section and you can actually find their, I call them CAFRs, comprehensive annual financial reviews. I think the new terminology is ACFRs, annual comprehensive financial review. They just flip the words around a little bit. So we're going to talk about this. Okay. Our college doesn't look like that, but that's okay. I think our college is better because, it's us. Okay, our objectives. We're going to look about accrual basis of accounting and recording of typical transactions for public and private not-for-profit college universities. I also want to suggest that if you are work study eligible, which means that you are eligible for FAFSA and getting financial aid, then they have a position at finance and accounting at AWC, and I put out an announcement on how you can apply for that. And they're looking for some people to interview and hire for work studies. That's my mischievous dog that he just got his super chewer box. And they have to, I swear they have to make the toys like super metal in order to, make it so that he can't chew through them and he still chews through them. Okay, we're gonna prepare financial statements for public and private, not-for-profit. We're gonna identify the various types of split interest agreements and describe accounting practices for each. One of the really cool things that if you ever go look at our CAF for AWC, you'll notice that we do have bond initiatives. Some of those bond initiatives have been where they have to go out and the voters have to vote on it, and the other one was a revenue bond. So we do have the ability to issue bonds as a government entity, dun dun dun. So anyhow, just something for you guys to think about. And one of the other things I just kind of want to hit up on is that when you look at our budget or even our comprehensive financial review, what you'll find in the budgeting process is we make a determination. If I spray him with orange, he gets really mad. So they don't, for some reason, he just doesn't like orange. So right now he's over by my side begging for forgiveness. Please don't spray me with orange anymore. But okay, so when we do the budgeting process, we make a determination, okay, what is going to be the total revenues or expenses that we're going to need to incur to run the college, yada, yada, yada. And then we're going to look at all the different resources that we get as a community college. Now, one of the things that, a lot of people, they don't think about a whole lot is what they don't think about is that we're actually funded quite a bit through property tax. So a portion of our budget is through property tax. Government funded. Now, what happens is we've got to go in and we got to determine all our other revenue sources, and whatever deficit is left over, that's the amount that the property tax owners are going to have to pay towards funding the college. So every year they have to go in and they have to review and look at all of that information and make that determination as what's going to be the percentage of property tax that's going to be charged to everybody. And you'll see if you even want to go in and look at, I think they just sent out our property tax information. And you can see the tax rates and you can see how much you're paying for, let's say for Yuma Union School District number, whatever the number is, school district number, whatever the number is. Not everybody's going to be paying the same thing. For example, out here in the foothills, we're paying for school district number 1. Over by Avenue C, they're going to be paying for the Crane School District. Some people may have to pay for some type of water use. We don't, because we pay for our own water use here in the foothills. So it's kind of interesting to see what gets put onto your property taxes and to understand what really goes into everything there. Okay, I'm gonna keep going. Okay, public versus private. Private, they're for profit. Okay, Grand Canyon University is for profit. They have to make money. Now, public, our goal is not to make money. Be careful with that, because sometimes I think that can get confused by people. They make the assumption that the college needs to make money. No, the college doesn't need to make money. The college needs to cover expenses and be able to expand services if it so is planning to. Okay, so I just want you guys to think about that. Private colleges normally don't get any state or federal funding other than maybe FAFSA, financial aid. Private colleges, they can get donations, again, financial aid, because I know that Grand Canyon University, you can apply for FAFSA there. I know University of Phoenix, they are a private for-profit, and they do FAFSA. So does National University, so does some of these Westerners. So even though they're private, they still can process FAFSA, but they're not going to be funded by the state, or they can't go out and get property taxes like Arizona Western College does. Okay. So here we go. Who has standard setting authority for colleges and university? Well, it's either going to be FASB or GASB. Just depends on what's happening. Private, not for profit, Liberty University, it's going to be FASB. Public, government owned, that's going to be us, GASB. Investor owned commercial, like University of Phoenix, that's going to be FASB, excluding those for not for profits. Okay, GASB is the primary for AWC. It's primary authority over government-related public colleges. There's one standard specific. FASB has primary authority over private. And NACUBO, okay, I'm sorry, provides additional guidance for both public and private. One of the things that no matter what you do and where you choose to go to, that I want you guys to be aware of, is you need to be aware of accrediting standards. Just pay careful attention to that. We are accredited, and you can go in and you can find this. Like if I was to come out of here and let's see what kind of nonsense, I hope I wasn't. Yeah, I am watching stupid stuff, but okay. I come over here to AWC's website, and I'm going to put in here accreditation. Okay, it's going to give me the accreditation. You can go anywhere. Depending on wherever you guys want to go, make sure you check this. We are accredited by the Higher Learning Commission. And it kind of tells you everything that's going on with us and who to contact. And, like if you have any questions or anything like that, we are audited by the Higher Learning Commission. And we really do try to focus really heavily on that and make sure that we are, again, like I said, we are in compliance. It's really kind of cool to pay attention to all of this stuff. And so you can see, you can come over here and you can verify the status. It says October 20, well, you just click on it and it'll tell you what's going on. Okay, so any college, university that you want to go to, you need to go make sure they're accredited. Then on top of that, whatever program you decide to go into, there may be additional accreditation. Like, for example, like automotive has different accrediting standards. They're accredited by the Higher Learning Commissions, and they go above and beyond. And they have another entity they have to report to for auto certifications. So hey, I'm just giving you guys some clues just to pay attention to. Okay, let me come back over here from current slide. Okay, we are special purpose governments engaged in business activities, may appear discreetly presented component units of the state government. Financial reports closely follow those of enterprise funds, measuring events using accrual basis of accounting and economic resource measurement. Private colleges, university, not-for-profits follow FASB. Normally it's FASB 117. Private institutions also measure events using accrual basis of accounting and the economic resource measurement focus. Okay, so this gives you a nice kind of little overview of everything that's going on in reference to that. Okay, National Association of College and University Business Officers. And this is interesting. I'm trying to work with, I keep talking to people. I'm trying to get everybody like on board to like do a mass exodus to the fraud conference next June. But yeah, they're still kind of iffy on that. But anyhow, so this is another another accreditation. Okay. This manual does not supersede GASB or FASB. It is to provide guidance. However, it's kind of like, you know, when we look at payroll and you got the Fair Labor Standards Act, the states they have to at least comply with or go above and beyond. Just think about it that way. So this one here, the NACUBU advises that scholarships, including athletic, do not require service to the college or university, are treated as reductions in revenue. It's normally accomplished through contra revenue accounts. On the other hand, fees waived by the institution in return for services provided by work study and graduate student assistantships are shown as expenses, and tuition and fee revenue is reported as gross amount. Okay. If a tuition or fee reduction is an employee benefit, work study, or graduate assistantship, the reduction is treated as an expense. Like, for example, one of my benefits is that my family can go to college for free. The AWC tuition is free. So it's treated as an expense, as an employee expense on my behalf. Academic scholarships that do not require service to college are treated as reductions in revenues. Estimates of uncollectible tuition and fees are also treated as reductions in revenues. Because colleges and universities commonly use June 30th, and we do, at the end of our tuition for summer school frequently covers parts of 2 fiscal years, not for us. That's actually, I believe, the summer, ours is a little bit different. I think summer is part of spring and winter is part of fall in terms of financial aid. Just, something to think about. And so you'll see subcategories for instruction, research, public service, academic support, student services, institutional support, and fellowships. We really don't have a whole lot of fellowships. We do have we do have the ability to apply for a leave of absence, where we go and we can do research and whatnot. Okay, and then we have some auxiliary expenses and the hospital's information there as well. Let's keep going. Here's our operating. And if I'm gonna sit here and I'm gonna talk this, and I'm already down to what page? I'm on page 17 of 40. I'm gonna go in here and I'm going to go to leadership. Go to the office of the president. I think it's in here. That's Dr. Core. Let's go right here. We're going to go to the college budget. Sometimes they will put in here. We're missing some. Okay. Here we go. I'm going to go ahead. I'm just going to grab the audited financial statements because they'll have a nice presentation here. Okay. And this will kind of give you an idea of what this chapter is talking about. And anybody can go in here. This is the auditor here. Okay, so basic financial statements, they're talking about that. You can see here, net position, primary government, Yuma La Paz. There's income statements. I love looking at this, property taxes, look at the percentage. 44% of our revenue comes from property taxes, 28 from government grants. I think this is really awesome for you guys to see where our revenue is coming from. And then expenses by category. So you can see here, the majority of the expenses are going into your instruction. That's me. That's all your teachers, that's our deans, it's all of learning services. And then they have different areas in here, student services, institutional support. This is, like the police, the printing, anybody who's there, admissions, financial aid, those people that are there to help us. There's operations, scholarships, auxiliary expenses. Well, look at that lovely depreciation. That's a whole lot of depreciation. But it is what it is, because we've got a lot of fixed assets. My office is in a building that is older than me, and I think it was put into service in like 1962. So I mean, we do have quite a bit of fixed assets here. And so you can kind of come in here, and I wanna get into some other areas. Okay, and this is an audit. So you can see here we got business type activities. I want to see if they have the one that I'm looking for, but I don't think they do. I think it's in the budget. And you can see just how nice and pretty. You can go in here and you can look. This is actually, I believe this is the foundation. So you can see that. Statement of cash flows. That's still statement of cash flows. Note to financial okay, so this is just your notes. I'm looking for something else in here. They're just giving you, okay, here we go. There's some investments that we have information in reference to this. And then I'm looking for the bonds. So you can look and see all of our bonds that are out there, and you can see that we've got, we do have high ratings in our bonds. And you can see like when they're going to be due, when they're maturing, everything out. Actually, yeah, these are debt securities. Notes to financial. Construction and commitments, long-term. More notes. Notes. What's this portion? Oh, lease payments. Risk management. This talks about our insurance. Pensions, our pensions are managed through Arizona State Retirement System. Okay. Actuary assumptions, pretty cool. Come on, I want to see what else they have in here. This is not nice for me to go through this, but you can basically go through this. I'm looking to see if they have any findings. Those are contingencies. Oh, look at this. Isn't this gorgeous? So this is some other information like you can see in here. This is Arizona State. Single audit report. This is what I'm looking for. I think we do have some findings. And I'm just going to say I don't think they have anything to do with accounting. Okay. IT, I swear you can't get around IT findings anymore because there's 2 IT findings, and that's not bad. This is listing all of the different funding sources that they receive money from. But IT is so difficult. And so this is talking about the indirect cost rate. Okay. Okay. Okay, audit IT. And there's the response. And so they just kind of keep talking about that. So you have access to all of these, okay? So it's I'm just gonna tell you, IT is one of the most difficult things to manage because the bad guys are so much faster at updating and getting ahead of everybody else. It's just kind of sad. Okay, here we go. So we'll just keep on going. Differences, Pell Grants. Those of you who plan on going into public service, please note there's a public student loan forgiveness program. And those are for people who work in the public jobs like human services. I'm one of them because I teach at a rural area community college. You can get your student loans forgiven after a certain amount of time. Okay, and so you can kind of see some of these financial statements that we were looking at. Statement of cash flows, blah. You guys know how to do them. Thank God, all you have to do is just turn around and hit the print button and it all works. Okay. So here we go. Yeah, if I ever won the lottery, I might think about giving. But we've had significant families that have given to the college over time. It is really cool, but you got to be really careful because all of those donations normally come with some restrictions. Okay, so you can kind of read about those. Charitable lead trust, you got the private and the public. Okay. Okay. And you can read about those, and that's a pretty looking university. I think ours is better though. I don't know, mine's just, maybe it's because I graduated here. It feels like home. So we'll talk to you guys in chapter 12. We're coming to the end of the semester. Let's get everything wrapped up, get it completed. You guys are doing really great. I'm really pleased with all the work that you put forward. Make sure you get all your homework done. Some of you are missing some assignments there. It seems like you keep forgetting to do a certain assignment, so make sure you get all the assignments that are due turned in. And we'll see you in chapter 12.